Hello and welcome back to for the Crypto Asset Conference. My name is Sridhar Deshmukh and I will be your host for this session. Before we kickstart the session, we would like to thank our title partner CoinDCX and ZP, powered by CoinSwitch and brought to you by BitPNS. Platinum partner Facebook, knowledge partner Global DCA, and insight partner Ikigai Law. We are now moving on to our next session on future of DeFi and NFT. And for this session, I would like to welcome the speakers, Ms. Kavita Gupta, former Consensys Venture MD and founder Delta Blockchain Fund, and Mr. Ryan Selkis, co-founder and CEO of Messari. I would request Ms. Kavita to take over from here and kickstart the session, please.
Thanks, Shiraz. Hey, Ryan, how are you doing?
Good, Kavita. Been a long time since we've seen each other in person, but it's good to see you here.
I know, it's been long. I think one thing about crypto, which we have to say, it's so global. I think the last I saw you was in China. So good for us to be back on East Coast, but digital.
Yes.
So let's kickstart with introductions, Ryan. Why don't you start and I'll go next?
Sure. So for those that don't know me, Ryan Selkis, I'm the founder and CEO of Messari. We're a crypto data and research platform. I've been full-time in the industry since 2013, back when it was still just Bitcoin and not crypto. I was in the founding team at an investment company, Digital Currency Group, where I was running seed investing activity and helping build the backbone of that business at an early stage in 2014, 2015. In 2016, we acquired CoinDesk. I ran CoinDesk and its restructuring, the build out of the Consensys events franchise, which some people in the audience may have attended in the past. And did a brief stint at Consensys as an entrepreneur in residence in late 2017. And that's where Kavita and I first met. And then, of course, ended up starting Messari in early 2018. So our broad mandate is to organize and curate crypto information at global scale and help people make sense of this emerging set of markets so that they can not just speculate, but participate more intelligently in the future digital economy. So all the tools that we provide are oriented around helping investors come up the learning curve and then actually dive in full time, ideally, as active participants and builders within this ecosystem. So happy to have hopefully a broad ranging conversation, and I'll try to keep up with Kavita.
Thank you. You're too kind. For my introduction, started my journey back in 13 with Live and Time, but I've been super actively only in 15, 16 with Ether and the whole Ethereum community. Started Consensys Ventures in 17 to invest into early stage companies. And now I have my own fund, Delta Blockchain Fund. We are looking at early stage, pre-seed, seed, and Series A. But we also do a lot of SPVs for the pre-IPO companies. I also teach at Stanford, and I'm very excited to actually have a lot of conversation on all the hot topics, which India is still figuring out. NFTs, DeFi, and then a little bit about regulations in the country, which our finance minister recently hinted about treating crypto not as an asset, but as a commodity. With that, Ryan, why don't we start with the whole craziness of NFTs? So just 2 days back, I was attending a dinner, and I was just amazed that two amazing founders, not going to name them, but like founders from the ecosystem, were talking to each other about swapping puggy penguins with a chimp to create this new $3.4 million swap. What is going on, Ryan? What world are we living in?
Well, I think if you've been around crypto long enough, you recognize that things that start out looking like toys end up being a really good place to look for upcoming innovations. And I think we're at the toy stage right now with NFTs. It's fun. There's a lot of wacky stuff going on. You've got mainstream interest, and celebrity interest. We've won a few different news cycles now. The numbers are eye popping in terms of some of the just massive returns that some investors have been able to generate by flipping these NFTs and being early to some of these mints and projects. But really what's interesting is they're discrete assets that can help people monetize their intellectual property, starting with games and digital goods, but ultimately, I think extending to really any data packet, which could be a real estate title. It could be your portable IP from a social network. It could be obviously art and collectibles, basically anything that has any value whatsoever that can be digitized and timestamped and authenticated as unique and proprietary, ultimately should be accessible via NFTs. And one of the mental models that I use is to think about like wallets as your digital identity, and then NFTs as different modules of your digital identity, right? So that could be an avatar if you're talking about a Bored Ape or a CryptoPunk, just as easily as it could be any other piece of identifying information or any other digital asset that you own and you want to be able to permission out. What's interesting is, because of the way that these assets are structured, they're programmable, they're interoperable. It unlocks a ton of different kind of novelties that otherwise you would never really think of. So, when you talk about creating a swap for, a pudgy penguin and a Bored Ape, I don't really know what the specifics of that are. That's way over my head. We're already kind of into insane territory, but. The fact that can be done, and there are some of these kind of interesting experiments that can be run just by adding snippets of code and iterating on this infrastructure that's been built. I think that's what's interesting, and that's where we're going to see a lot of innovation unlocked over the course of the next decade.
I think the innovation, and I'm one of those people who defend it but also make fun of it, because sometimes at 11:30 at night, when you're looking at 2-3 people looking at their phones and trying to do the swap, you're like, okay, but what's happening in this world? But then I also realized that when I was a kid and we used to play all these video games, we used to take that badges and try to move it and collect those items. I'm still bad at gaming. I'm still a Candy Crush person, but like I still invest some of my time and money into that. For me, the biggest NFT, I feel like interoperability is going to bring in front because of NFT and now the DeFi, like between all these ecosystems. If I'm playing a game and I have a badge and I want to take that badge from a project on Ethereum, from maybe one scalability solution, Polygon, to Optimism, but to the next level, I want to take that game to another game on, let's say, Solana or Tezos. I feel like these penguins and chimps are going to allow, with the market value they have created, for product builders to build that interoperability layer. And for me, that interoperability layer is going to be the next big discoveries in the space, which took a step back, though Cosmos has been here from a long time, but like took a step back. But the thing which I also think at the same time, and would love to hear what you think, is how many of these chains, which are becoming really hot, gonna exist once the DeFi yields are not gonna be that much. Right now, we are moving from one chain to one chain or another scalability solution to another scalability solution, because DeFi yields are better in the new one and ETH prices are high or gas fees are high. What do you think? This is just going to continue to be a roundabout system, or there's going to be an end game to it?
One of the mental models that I really like, and that I've co-opted from Arthur Hayes at BitMEX, was tied back to something that he wrote earlier this year in a blog post related to the flippening between Bitcoin and Ethereum. And he said something that I agree with and have thought of over the course of the last 6 to 12 months, but wasn't able to kind of cleanly articulate like he did. And that is, Bitcoin is very much like M0 and replacement for either central bank currencies or reserves or kind of traditional currency hedges. Whereas you could think about Ethereum, Solana, Polkadot, all these other layer ones or smart contract platforms. And you can think about the assets that secure them almost like FANG stocks, right? Especially with 1559 and some of the stake to earn models that these proof of stake systems have, you are earning network fees and yield just like you would from owning a share of stock in a cash flow producing company. And because the activity in these networks, you actually have legitimate price to revenue multiples that you can value the entire smart contract economy on. And so I think about the whole like ETH is money thing, or everything's cryptocurrency. I think that's a little bit tired and worn out. I don't really think that's the right mental framing. But if you think about all of these other kind of layer one platforms as the FANGs, right, or as a group of major winners in the Web3 economy, then you're going to see $100 billion, maybe even $1 trillion layer one systems that are facilitating transactions, and where the assets that ride on top of them are interoperable with each other. So you can kind of cross over from chain to chain over time. So I don't necessarily think it's winner take all, but I do think that the rising tide is going to create a ton of value for the smart contract platforms themselves. Then the question becomes, where does value accrue on the application side? And that's when we start to get into decentralized computing, NFTs, DeFi, and so on and so forth. But I haven't really spent too much time thinking about the pros and cons of Solana versus Polkadot versus Algorand versus Ethereum, because I think it's a little bit of a false choice. And we've seen this kind of over and over again, that people get very hung up on relative valuation and trading, and not necessarily on the fact that Ethereum does have capacity constraints. So you're seeing some of that capacity go to new blockchains, and eventually, once there's mass adoption on those chains, they will have their own capacity constraints, and you're going to consistently be fighting the scaling battle for a very long time, where you're going to need multiple solutions and multiple distributed ledgers in order to accommodate all of this activity.
No, I agree with you. But as an investor, it's sometimes very baffling, because 17, 18, I was investing into scalability solution layers. So like we had Starkware, we did Ligro, we did Polygon, like to try to figure out on how to build Ethereum to go to that level, to not have that problem. And now suddenly so much of DeFi yields are coming from different. And I feel like there's a same cycle, as you said, right? Now, should we be just investing into DeFi projects, or should we be on the application side, or now we have to invest in the whole infrastructure stack of it again and build the new ecosystem? It's been very baffling. But I think let's talk about DeFi. A lot of people in the space simply think that you are. So I was reading something, and which brings us to DAOs and how the regulation body are trying to understand DAOs, as we understood from Uniswap. But most importantly, as we are talking about DeFi, a lot of people are saying you're just printing USD money in thin air, distributing that USD money thin air, and then you're just going to bring back that USD into a real liquidation at some point. And I'm like, interesting. So how is US government tracking the amount of money getting printed? And is that a new thing which most of the country governments are going to have questions about? My view on it, I would love to hear your view. My view on it is what USDC and USDT has done is actually they've proven that they have at least 90% plus assets with the treasuries and cash equivalent to prove that that's how they're printing. So it's like gold standard going back. But do you think everybody else is going to be that prudent, or we suddenly actually going to see air money?
Well, it's air money, I guess, on a secondary basis, right? So the stable coins are denominated in dollars, and dollars are a byproduct of the fractional reserve banking system. So you can have fully reserved dollars and still have it be, de facto air money, but it's just, the government fiat air money versus crypto kind of conjuring, new dollar denominated assets from thin air. So I'm not worried about that too much. In fact, I think, one of the biggest opportunities in the West and in India, basically like any democratic country, I think, is to actually embrace crypto and stable coins that are trading on crypto rails. and invest in the infrastructure around those assets, because whoever's really leaning in on the infrastructure side is going to have a head start building the rails for any actual central bank digital currency that might get rolled out in the future. And I think right now there's a bit of a false choice from global authorities and central banks, where they think, well, central bank digital currency is very interesting because it allows us to do this, this, and this, but we can't allow crypto to thrive without really tight regulation, because then it potentially puts us at risk. At least in the US's case with the US dollar, I would say that the dollar's viability as an export and as a global reserve currency is bolstered and strengthened by the rise in crypto rails and infrastructure that's being built, because USDT, USDC, all of the other kind of major stablecoins that are the backbone for crypto finance, they are dollar denominated, right? There are reserves that exist and sit in banks that are dollar denominated, and you want to own that if you're the U.S. government, or own that status, even if you don't kind of own the underlying currency. So I think we'll see more of that with euros. We'll see more of that with other domestic currencies. I hope that kind of structure where private companies are still relying on the existing banking systems that are in place, keeping kind of full reserves, but then digitizing those reserves and then allowing them to trade freely on crypto rails. I think that's a big opportunity for anyone that embraces it. The alternative is something like what we're seeing in China with the DCEP initiative and payment system. And I just don't think that's going to be as interesting from an innovation standpoint, nor do I think it's going to be as easy to export, because I think there will be pretty significant political pushback on adopting something that's so tightly controlled by the CCP.
Completely agree with you. But I also believe that the origination of Bitcoin, or the idea of adoption of Bitcoin, was always about why any currency like USD or Euro should be the backbone, or should be the peg currency for anybody. And we went through the Bitcoin rail. We tried to make it a global transaction or a global settlement currency at least. And now with the stable coin, that's my only beef with stable coin, though I love USDTs, but like my only beef with stable coin is coming back to the thing that you suddenly have USDT or USD as the pegged currency itself. Now, with the DeFis, we are looking at a lot of yields. Like it has become suddenly a game of staking, yielding, farming, all the terminologies which people are very, very confused about, right? And I was also looking at some of the questions. So why don't we go with this, right? This is going to be fun. Messari is known as the best information place to go. So let's go one by one. Let's actually just spell it out. What is staking? What is yielding? What is farming?
Well, staking simply refers to using blockchain native assets to secure the underlying ledger that's recording transactions. So instead of using computers and actually processing transactions using the competitive algorithms that you see in proof of work mining, you actually put stake into the system and lock up assets. And in return, you're basically helping to verify transactions that sit on that ledger. If you try to cheat the system or spoof transactions, then your funds that you've staked are at risk, and you can be what's called slashed, ultimately lose those deposits. So there's pretty strong disincentives to try to either steal funds or manipulate the ledger in any way. Earning yield then is essentially earning some of the new network rewards that are released in exchange for staking those assets, plus any of the revenue that might be generated by the network. So you can think about this almost like a cooperative or a mutual, where any investor that's investing money into the system is ultimately earning the rewards that are coming out of it. And it's not owned by a company or any kind of individual, so much as the collective that has ownership in the network via the network token. And I think the whole genesis of farming was the thing that really helped this entire move in the last 18 months or so with DeFi in particular. I think without farming, it was unclear how you were going to encourage people to participate in a decentralized exchange or participate in a decentralized lending protocol, because why would you lock up a volatile asset that, in return for, earning 4% interest, 5% interest, something like that? It just doesn't make sense. The risk reward isn't there. But farming changed the dynamics because you basically were able to layer on not only the yield incentives, but the equity-like incentives of earning more network tokens in exchange for participating early. So it basically turned every liquidity provider, every early user in these decentralized systems into early shareholders in these cooperatives. And that juiced the returns, which made it more enticing for people to join early on. You were investing not only in the underlying protocol and the yield that it could generate, but also investing on the basis that if you helped bootstrap the network and then it ultimately became a multi-billion-dollar network, then the tokens that you earned would be far in excess of the 4 or 5, even 10% interest that you would have earned otherwise. So I think the thing that's interesting about staking, yielding, farming is they're very intuitive. So I think it's helped the half-life of investors that have been interested in Bitcoin, but it took a long time, and then got interested in Ethereum because there's so many other applications you could do. Maybe it took half as long once they were into Bitcoin. And I think DeFi, like the half-life maybe is even shorter, because you can see Ethereum and all the activity on it, and then you can also appreciate that these decentralized applications that are riding on top, they actually have cash flow generating properties. They look like traditional finance. The models are the same. The principles and the owners of the networks and the way that they function under the hood are different. But the economics and the way that you could value these networks hypothetically are very similar. So I think that's been really the primary catalyst for this boom. NFTs are kind of an entirely different category in and of themselves, but I think it's nice for traditional investors and for folks who come to Messari to be able to see price sales ratios or metrics that they can actually wrap their head around if they're used to looking at traditional financial services companies.
No, I completely agree with you. I think the only thing with the DeFi part, which I find, because I keep on thinking about the regulatory part and the DeFi part. For the DeFi part to exist, you need to have a lot of DAOs. You need to have those decentralized organization. But on the regulatory side, I feel like a lot of countries are still figuring their head around crypto. So they're still talking about how to regulate crypto, and then talking about and trying to have, when I think about regulations, building a lot of walls around the data. So for an example, Biden administration just talked about the global data monitoring for the crypto exchanges, which is for a lot of crypto builders, that is like completely antithesis of the pure point of this being privacy and something to go with security. And now you have to do a global KYC. Once we start doing that, and now you are in the world of uncustodian wallets and non-custodian wallets and everything with DeFi, how do you see regulatory bodies really trying to get nab of DeFi? Like for me, just explaining and doing staking between a USDT with something else has been a long time. So let's take it as our last question and say, how do you see the regulation on DeFi going to work out? Because that's something I'm not able to put my head around.
Honestly, I'm not sure. I think the position that a lot of us have taken is that regulation is fine. In many instances, folks that have been building within crypto for a long time have been asking for better regulatory clarity, but also asking for some type of common sense to prevail. And so if you think about the major items that regulators and authorities worldwide care about, they care about limiting nefarious activity. Well, we have on-chain transaction monitoring solutions for that. You don't necessarily need to shut down the entire decentralized finance economy to to actually track nefarious activity, it's probably much more effective to just regulate the endpoints, the custodians, the exchanges, the other centralized parties, or to lean on some of these data forensics companies to track transactions to the extent that there are actors moving money through decentralized finance protocols on a peer-to-peer basis. They're concerned about tax evasion. And again, 90% of the value that you could get from better tax enforcement and tax collection is probably going to come from looking at the exchanges that have this customer data that can actually send 1099s to their users and make it easier for not just the governments to collect, but for the individuals to pay and actually understand what they owe on a year-to-year basis. And then I think they're worried about financial stability, but DeFi is collectively a $70 billion market cap market compared to traditional financial services, which is it's somewhere in the order of like $25 trillion worth of global GDP. So it's I think it's a little bit crazy to think that the solution to DeFi regulation and crypto regulation in general is to kind of strangle it and enforce mandates on developers versus centralized, already regulated players that exist within the ecosystem to help new users get onboarded and actually transact with authority. That's not to say that folks that are transacting on a purely peer-to-peer basis should not have to pay their taxes or should be able to launder money with impunity. I think the penalties for that type of activity already exist, and the tools to actually track those transactions already exist because these aren't fully private, anonymous transactions, but they're actually fully recorded on a public ledger. So I think with any luck, common sense will prevail, and I think some of the winning economies in the next 10 years are going to be those that actually embrace crypto. Embrace the fact that peer-to-peer finance is going to have a different set of regulations tied to it, and not throw the baby out with the bathwater just because they're afraid of the unknown, which is really what it is. It's not grounded in reality or fact so much as fear of the unknown and fear of their own technical incompetence or being behind the learning curve.
Yeah, and that's been happening from a long time. Otherwise, Portugal is the answer, as everyone in DeFi space is telling me. Well, thank you. I see Shiraj here, so it looks like that is time for us to say bye. Hi, Shiraj.
Hi. Right. You've guessed it right.
Okay. Thanks, Ryan. Thank you so much, IMAI, for an amazing platform. And I hope we help some of the Indian regulators and builders out here. And please let us know.
Thank you very much.
Thank you so much,
Take
Ms.
care.
Kavita and Mr. Ryan. Thank you for making time and making this happen. And
Absolutely.
another thank you to all our attendees as well who have been with us here today. Thank you so much, everyone. So this will end the day one of HODL, a crypto asset conference, and we will continue with more of these sessions on day two, which will happen tomorrow. So we expect all of you. We hope to see all of you once again live tomorrow. And we believe that this one day has been really value adding, and we hope to add more value to your professional lives with the next day as well. Thank you so much.
Thanks, everyone.
Thank you.
Bye.
Good night.